Hello everyone, my name is Corbett Economo and I'm here today with my teammates Bobby O'Kane and Shale Sheth. And today we're going to share with you a recommendation on the iShares MSCI Taiwan ETF. Taiwan is one of the most dynamic economies in the emerging world, and the iShares MSCI ETF, ticker EWT for short, is an excellent way to gain exposure to the equity market in Taiwan. However, despite some reasons to be hopeful, the geopolitical risk, continued competition around semiconductor chips globally, and the likelihood that we are on the backside of a chip cycle leads us to a sell recommendation on EWT. To walk you all through our reasoning, today we will provide a brief asset summary and review of top holdings, cover key events and geopolitical risks for Taiwan, do an asset valuation, as well as review the historical performance of the ETF, and finally, we'll summarize our recommendation with a final assessment. First off, EWT tracks the MSCI Taiwan 2550 Index, which provides exposure to large and mid-sized companies in Taiwan. The fund has roughly $3.9 billion of net assets and holds roughly 92 equities. The ETF is heavily concentrated in the technology sector, with that making up almost 60% of the fund. It is also heavily concentrated in one firm, with the Taiwan Semiconductor Manufacturing Corporation, TSMC, the national darling, making up roughly 22% of the index. When we look to the top 6 holdings of the ETF, we can see that Taiwan Semiconductor Manufacturing Corporation makes up a big chunk with 22%. The other 5 companies are all related to the technology sector and mostly with semiconductors. The extreme concentration of the index is heavily influenced by the industry, sector, and geopolitical environment, which now Shale will talk about.
In order to gain a true understanding of the value of EWT, it is important to take a look at the history of Taiwan-Chinese and U.S. relations. In 1979, the U.S. officially endorsed the One China policy and enacted the Taiwan Relations Act. This set in motion the policy of strategic ambiguity, which is a policy that allows the U.S. to help Taiwan defend itself through arms sales and financial support without recognizing it diplomatically as a separate country. In recent years, in light of the CCP takeover of Hong Kong in 2019 to 2020, and Xi Jinping being made a leader for life, there is now a pervasive fear that China could try to invade Taiwan and take full control of the island. In response, the U.S. has ramped up arms sales to Taiwan, and the Speaker of the House, Nancy Pelosi, also made a spontaneous trip to the island to promote its independence and democratic process. The geopolitical importance of Taiwan and its semiconductor industry was even further highlighted when the world faced an acute semiconductor shortage after the COVID years. Leaders in the U.S. took notice, passed the CHIPS Act, which paved the way for billions of dollars in subsidies to build semiconductor manufacturing capacity within the U.S. Due to these geopolitical risks, many investors have been reassessing their investments in Taiwan of late, most notably Warren Buffett, who sold his entire $4.1 billion stake in TSMC only a few months after he bought it. A major reason behind our sell rating is that we don't believe the geopolitical risk of a Chinese invasion of Taiwan is fully priced into the stock price of EWT, and that it is difficult to accurately underwrite this risk through a simple risk layers approach that we can normally use for valuing emerging market securities. This is because all of the risks in Taiwan's case are deeply interwoven and intertwined. There are many players involved, including 2 of the world's superpowers. It isn't possible to go long one risk premium layer and short another in order to isolate certain risk layers. For example, if the CHIPS Act allowed the U.S. to build sufficient chip manufacturing capacity, normally we would think, okay, that will affect sector risk because that means the Taiwan semiconductor industry would lose market share. But if you think a step further than that, would the U.S. defend Taiwan in the event of an invasion if they are no longer reliant on the island for a critical resource, especially in light of the CHIPS Act? How would a CCP invasion affect the productivity of Taiwan's semiconductor manufacturing industry? Would they use it as a weapon against the U.S. in a potential war? Would this in turn affect interest rates in the U.S. because of how much the U.S. relies on Taiwan's chips? And also, considering TSMC is a third of the Taiwan Stock Exchange, the semiconductor industry comprises 15% of Taiwan's GDP. How would a Chinese Communist Party takeover affect stock market risk? How would a takeover of the country's main export affect its currency? Would China possibly force the Taiwanese to use the Chinese yuan? As you can see, there's so many potential geopolitical ramifications, and all these ramifications are so intertwined that it's too difficult to price this geopolitical risk. After all, Warren Buffett himself, just a few months ago, claimed that he thinks TSMC is one of the best run companies in the world. But his main issue is just where it is located. If it was located anywhere else on the globe, he wouldn't have sold it. But he said it's located in Taiwan. And even Warren Buffett, the world's greatest investor, didn't feel comfortable assessing the geopolitical risks of Taiwan.
Comparable assets used are the Franklin FTS Taiwan ETF and the iShares NCSI China ETF. There's a similar value across all three, with a disparity of asset size in comparison to the Franklin. The China ETF has a more robust diversified portfolio, with its top 5 assets only representing 25% of the entire portfolio, where the Taiwanese ETFs are almost 45% of their entire asset portfolio in the top heavy section. In this 5-year comparison, we can see they mimic each other very closely in their performance, and the correlation shows very tight with no spread. You can see a significant increase in October 2022 and decrease of December 2022. The Asian economy was expected to experience a period of restraint in the coming months following that time during the several compelling factors. First, the growing driving force of manufactured exports, which have been instrumental in the past years, appears poised for deceleration due to rising interest rates globally. The global economic outlook now exhibits a rising trend towards stagflation, indicating that the mounting inflation, particularly in essential commodities such as food and energy, will likely impede demand for manufactured goods. Second, China had witnessed a sharp surge in COVID cases, marking the highest figures since the initial phase of the pandemic in 2020. This alarming increase in infections had expected serious disruptions. And third, U.S. policy measures had yet to show a notable relaxation, further contributing to the subdued state of affairs. This is a response to the Chinese-Russian relationship in the context of the Ukraine war and how that will play out with the political unrest between China and Taiwan.
In summary, our final recommendation is that the Blue Jay Portfolio Subfund 6 sell its entire stake of EWT at the current market price, $47.47. The ETF does not have a lot of diversification, is heavily concentrated in technology, particularly Taiwan semiconductor industry. A single company, TSMC, comprises 22% of its holdings. The ETF has performed well in recent years due to a chip shortage, but it still remains volatile, specifically because of all the geopolitical risks that are so difficult to value. On a daily basis, the stock price of the ETF will basically become a proxy for investors betting on the possibility of a Taiwan invasion. And lastly, there has been a recent slowdown in the chip industry, which will affect the stock, could affect the stock price of EWT. And if the US is successful in building chip manufacturing capacity due to the CHIPS Act, that could hurt Taiwan's market share.